All right, Zach, thank you very much. I'm joined now by Alan Valdes of Silverbear Capital. So, Alan, what do you make of today's market action, a second straight session of a modest pullback?
You know, it's really a waste of a clean shirt today. It's just so quiet down here. You know, it's a little back off here. You know, the earnings have been flip-flopping around. We had good earnings from Bank of America, CXX, that's kind of poor earnings. So basically, that's the way it's going. Early, about 7% have reported, but out of that 7%, 85% have been on the profit. Doesn't really mean much, but you might see a better earnings season that has been forecast.
And I guess it's a good thing that the bar has been set so low in this reporting season. I guess what does that mean for the markets?
Well, it could, you know, you're right. They lower it so much, anybody could jump over it. So you might see, like I said, a good earnings season, which doesn't mean much for the market, but in a slow summer, you'll grab any kind of headline you can. And with the tariffs still hanging around, any kind of headline would be good.
Speaking of tariffs, we did see a report today saying that Apple might be moving some AirPod production to Vietnam. It was just a report, Apple hasn't confirmed it, but if that is indeed true, I guess what does that say about the status of the trade war, the fact that a company like Apple can kind of sidestep the tariffs?
Well, you know, you could see a capitulation with China. I mean, if that is true and you see other companies follow suit, I mean, yeah, that could start a really open door. It could hurt China, no question about it, more than it would hurt us. And you got Cambodia, you got China, you got Indonesia. You got a lot of places, you know, we forget. They can move to very quickly.
What do you make of some of the price action we're seeing in Apple now at about $205 a share? Still about $10 a share below where it was in early May, but are you worried about Apple for the rest of the year?
No, I don't worry. I own Apple for true transparency, so I don't worry about Apple. And I think in the long run, if I'm a fund manager in Europe, I'm looking for something to buy, get out of that mess over there. You look at American equities and you look at a stock like Apple for 10 years. If you're an insurance company in London, you look at Apple. If you're in France, you look at Apple. You're looking at those great American stocks, and Apple is definitely one of them.
When it comes to the broader markets, as we're still near that 3,000 level, is there a strong case to be putting new money to work right now, or would you advise people wait for some sort of a pullback?
You know, I think I'd wait in here because I think the summer's going to be like this, topsy-turvy, kind of slow. Earnings season just getting underway. I don't think we'll see a great earnings season. I think it'll be better than we expected, but I think it'll be more topsy-turvy, especially with the tariffs. I think if we get some clarification in that direction with the trade war, then you want to put money to work if it looks positive.
Because the market has run a lot this year, up about 20%, but I guess since September of 2018, the market is only up marginally. So if you take out the fourth quarter decline and the first and second quarter rebound, the market really hasn't moved much.
Hasn't moved really at all, and that again is basically on the trade war. I think lowering rates will help us. I don't know if it's the right move to make, but it will help equities here. So we'll have to wait and see.
All right, Alan Valdes, always great to have you here. Thank you.
Thanks for having me, Scott.
Zach, back to you.